The main thing is it's kind of given me a rigid and structured process, really, which I didn't have before. Even though I was dabbling on the market, I didn't have any of that sort of systematic, structured process in place. And by that, I mean, first of all, developing a trading plan. And initially I thought, this is, it's just kind of silly. But when you do it and when you go through the process, you realize it's not, because it makes you think about each and every aspect of the trading process. And then you put the rules in place, like a blueprint document, and you refer back to it when you're not sure how you're going to react. That's just one of the things. And then it helps you with controlling your maximum drawdown, which is basically, from an investor point of view, is your risk. That is the main objective here, is trying to just keep you in the market, but keep you out of the market when you have these downturns. A small fall might turn into a big fall, but you don't know that at the time. And COVID actually was the best display of how the system works, because it basically ensured that you got out of the market. And that happened pretty quickly. Your drawdown was way, way less compared to what the index experienced at the maximum drawdown point. It's managing the amount of risk that's going to get you out of those trades if it becomes very volatile and there's a high probability of that the market is actually going to have a big downward.